Okay, welcome back. 50 points lower on the Nifty. Things are continuing to just, go sideways with no real momentum, at least not yet on either side. That's not the case with lots of individual stocks and a group of stocks. The ADAC group is an example, case in point. There is news at the bottom of the screen. Dr. Reddy's is continuing a voluntary recall of injection. So that's what's coming in.
I think it's important to know what kind of recall it is. Prashant, there are three types of recalls in the US. That's Class 1, Class 2 and Class 3. Class 2 and Class 3 is not a big deal. I mean, it's most of the recalls in the US are voluntary in nature. Class 1 is something which would obviously be of concern. So I think we need to just get down to the fact about what kind of recall it is, as opposed to them just voluntary recalling, because a lot of companies keep recalling drugs for various issues. Could be labeling issues, could be much more serious issues. So we need to know how much they're recalling and the type of recall as well.
Okay, so we'll try and get out more details on this one, but stock's not reacting. Let's bring in Ashwani as always at 11:30 for a quick check. Ashwani, thanks very much. What's the trade here? Directionally speaking, which way are we headed?
See, definitely headed down. Basically, what is going up is, small consumption like Bata and Jubilant Food and Titan, etc. The financials are down, and the entire mid cap is down. IT is also not showing great follow through. So basically, if 80-90% of the market is down, there's only so much you can hold on to the market. As far as I'm concerned, still the market is good enough to sell. 10,900 is a stop. I wouldn't be surprised if we get very close to 10,650, 10,700. I think the market lacks triggers, and plus there's all kinds of confusion, and all of these beleaguered companies are again there's a bit of a credit crisis kind of situation. So that way I think financials have more to go. Having said that, VIP Industries a buy with a stop of 504, target of 524. Indusind Bank is a sell with a stop of 1485, target of 1450, and Adani Enterprises a sell with a stop of 134, target of 122.
Okay, well, we have a Twitter query for you, Ashwani. We'll just get to that in just a second. Amitav has 700 shares of IOC at 157, and he wants to know whether he should hold or sell that particular stock, IOC.
See, the problem with IOC is that it's not a stock, it's a government department where, government calls the shots. So, as with other PSUs, it's not worthy of investment, because when prices go up, they are, being told to absorb things. That's not how companies work. So you should exit. Today, I think it's very simple what to buy. Buy all kinds of small consumption, because those stocks will probably hit fresh highs even before the elections.
Okay, Ashwani, thanks very much for that. Appreciate you joining in with that perspective. Small consumption names is what's on Ashwani's radar. Otherwise, the index is sideways to down, as he's pointing out. We take a very quick break here. We come back and we discuss market fundamentals. Manishi Chaudhary of BNP Paribas is the guest on the other side. Stay tuned for that conversation.
Welcome back. Well, at least some signs of green coming in a couple of stocks. So Divi's Labs, for example, is up around 5.5%. That one is going from strength to strength, above 1,600 rupees. And a couple of other pharma stocks, Jubilant Life, for example, reacting to its numbers and conference call, that stock up around 1.6% as well. Manishi Chaudhary, Asian equity strategist, at BNP Paribas, now joins in to discuss the markets. Manishi, hi. Thank you very much for joining in. Welcome to the show. What's your sense? The budget is done and dusted. Did it leave a bit too much damage according to you, or neutral as per your expectations?
I would say the budget had its positives as well as, the risks, some of which were underscored. On the positive side, it clearly provided support to consumption at the base of the pyramid through the, the farmers' support program, also the pension plan for the unorganized sector workers, and the tax rebate that was provided to taxpayers below 500,000. On the other hand, we must also be mindful of some of the very aggressive assumptions that were made in the budget, particularly relating to the revenue assumptions on GST and the disinvestments that were factored in. And I think what we're seeing in the market today is the degree of skepticism that the market has about these assumptions. And as a consequence of that, not only have equities underperformed, but also bond yields have increased. In fact, on Friday itself, we saw a spike of about 10 basis points or so. And we think in the medium term, this might continue.
Manishi, hi, morning. So what is the road ahead for the market then? I mean, just distill it down for us, going all the way into the budget, into the elections.
Right. It's difficult to take a slightly longer term view at this point because, the big event, which is the elections, that, that intervenes in April, May. But we think in the near term, the market would continue to underperform its Asian peers. Two reasons for that. Number one, despite the recent underperformance of India, which has led to the relative P multiples declining slightly, it is still quite significantly overvalued compared to the North Asian peers. And if one looks at the relative price earnings multiple and the relative price to book, it's still about one standard deviation higher than the long-term mean. Second, Indian corporate earnings continue to drift down. If you look at the consensus estimates over past 1 month and 3 months, almost each and every sector has declined, with the only exception of industrials. And I think in the near term, even the sentiment for industrials could be a bit dampened because the capital expenditure growth assumed in the budget was quite pedestrian.
Okay. Manishi, just moving away from the budget now, what is your sense in terms of a lot of these stocks which have destroyed a lot of wealth? I mean, from the mid-cap space, we've been talking ad nauseum about the likes of DHFL, Z Media, Dish TV, you name it.
All right.
What is your sense in terms of how one should approach these stocks? Do they stay on and wait for any sort of recovery, or do you sell out? And what's your approach in any case in terms of your portfolio?
As far as the mid caps and small caps are concerned, we are not yet willing to hang our hats on that universe. As far as the lock, stock and barrel call is concerned, I mean, we think that one should be quite stock specific in that universe. One should look for companies which not only have a decent growth forecast attached to them, but also have good corporate governance and a decent record of cash generation over past, about 8 to 10 years. We actually lay quite a bit of emphasis on these parameters, like a decent balance sheet. Debt to equity ratio should be below a certain point, at least about 0.5 to 1 or below that. Cash generation should be healthy. And of course, corporate governance is an important point of consideration for us. So, I think one has to be really selective and very stock specific in that universe. It's difficult to paint that sector with a broad brush.
Manishi, so this point about near-term underperformance, could this change with the RBI policy decision? Is there a doubt that we will get a cut? Is it a close call? What's your sense?
We are not subscribers to the hypothesis that we could get a cut. We think the RBI would simply stand pat on the monetary policy that's coming up on 7th of February. Even though inflation is very much under control, and for past few months it's been consistently under RBI's reference range, I think the budget itself and the possibility that fiscal deficit could increase by about 30 basis points compared to the FRBM target. And if those aggressive, the revenue assumptions don't come true, it could be even higher. That might prevent the RBI from cutting rates right now. Our point of view is that in the foreseeable time horizon over the next 1 or 2 quarters, RBI would possibly just stay put at the present levels.
Okay. But will that make a difference to the markets at all, Manishi, that we don't get a rate cut?
Sorry, could you come again? Could you repeat that question?
Would it make any difference to the market in the, in terms of, are we factoring in anything from the RBI in terms of a rate cut, or it's assumed that because of the fiscal deficit, government borrowing, it's probably not going to happen and there could just be a change in stance?
Difficult to comment on the market consensus. I have heard this point of view of late, over the last couple of weeks, maybe 2 to 3 weeks, and particularly after the new governor took over. It's difficult to guess what the market is factoring in right now, but I think the overwhelming expectation even now is that of, the RBI just staying put. So I think if the RBI does cut rates, it would possibly be a surprise to the market.
Okay, Manishi, thank you very much for your time. Appreciate you joining in with that quick perspective on markets, rates, stocks, everything. Thank you, as always. We are down 52 points on the Nifty. So things are not looking all that great. Sideways with very little buzz or excitement in any pocket. Monetary policy to be announced at 11:45 a.m. on the 7th of February. That's essentially, so usually it's
exactly this time.
Exactly this time. So what is the time right now?
11:45 a.m. Just a couple of days.
Did we time that flash?
Thursday, yeah.
11:45 flash at 11:45. But it's usually a little later in the day, so it's been preponed somewhat. But it's on the 7th, and it will be out exactly at this time in a couple of days. All right, I think we're going to take a very quick break here. We will come back. We leave you with some opinion that we got from Neelkant Mishra of Credit Suisse. We also spoke with Samir Arora of Helios Capital earlier in the day. Listen in. We're back in just a bit.
I think there is uncertainty and stress on domestic growth aspects. So as the economy has slowed in the last 3-4 months, I think the pace of sell-off has accelerated. I think the uncertainty around elections also is something that affects the small and mid caps a lot more than the large caps, because that's where a lot of the domestic shareholding is. Are now hearing that other large groups which have heavy levels of indebtedness, some of which were known, some of which not really well known, are now coming into the crosshairs. And this is absolutely nothing to say that those groups are insolvent. But yes, I think the market is becoming very jittery about providing liquidity to them, and which is something that I think is also driving the economic slowdown.
I'm feeling okay about the market, but not good. First of all, Indian market is really underperforming Asia and emerging markets, which itself is a bit of a drag. It is actually, in real terms, already a bear market, or whatever you want to call it, because other than these 3-4 stocks, which is Reliance, TCS, Infosys, and maybe 1 or 2 more, basically the rest of the market is down at least 3 to 4% more than what the index shows.